Institutional Equity Research Report, NYSE, SMR. NuScale Power Corporation, a $1.9 billion war chest, a vanishing revenue line, and a wait for TVA. Section 1. Executive Summary. NuScale Power Corporation, founded in 2007 and headquartered in Corvallis, Oregon, is the developer of the NuScale Power Module, or NPM, a small modular nuclear reactor design that holds a genuinely important distinction. It remains the only SMR technology to receive full design approval from the U.S. Nuclear Regulatory Commission for 2 separate module sizes. NuScale operates as a technology licensor, not a plant owner-operator. It designs and sells the reactor modules and supporting engineering services, while commercialization partners and utility customers actually build, own, and run the power plants. In plain terms, NuScale isn't selling electricity, it's selling the nuclear reactor engine that goes inside a power plant someone else builds and operates, a business model the company has compared to being the chip in the Dell computer. That model depends heavily on a small number of very large commercial deals converting from announcement into signed binding contracts. And right now, the company's single most important pending deal, a potential 6-gigawatt nuclear deployment with the Tennessee Valley Authority, TVA, to be structured through commercialization partner Entra1 Energy, still has no finalized power purchase agreement or construction timeline, despite being announced back in September 2025. Q2 2026 results, reported August 5, 2026, illustrate just how binary and lumpy NuScale's current financial profile is. Revenue collapsed 98.8% year-over-year to just $0.1 million as prior engineering work on the company's Romania project wound down with nothing yet replacing it, while the company's cash and investment balance actually surged to approximately $1.9 billion, up $900 million in a single quarter, funded overwhelmingly by issuing nearly $985 million of new common stock. NuScale remains, in the company's framing, a pre-commercial business. Management is deliberately stockpiling capital and manufacturing readiness ahead of contracts it does not yet have signed. Key facts at a glance. Core technology: NuScale Power Module, the only SMR design with full NRC approval in 2 module sizes, 50 megawatts and 77 megawatts. Business model: technology licensor and equipment and engineering supplier, not a plant owner-operator. Q2 2026 revenue, $0.1 million, down 98.8% year-over-year as prior engineering work on the company's Romania project wound down, with nothing yet replacing it. Q2 adjusted EPS, negative $0.13, in line with consensus. Cash and investments, approximately $1.9 billion as of June 30, 2026, up $900 million sequentially, funded largely by a nearly $985 million equity raise. Key pending catalyst: a definitive power purchase agreement between Entra1 Energy and TVA for up to 6 gigawatts of NuScale-based capacity, announced September 2025, still unsigned. Active legal risk: securities class action, Trudson versus NuScale Power Corp. D. Oregon, alleging misrepresentation of Entri's experience and capabilities. Section 2. Investment thesis. The bull case for NuScale rests on a genuinely rare regulatory moat. No other SMR developer has NRC design approval today, and NuScale's manufacturing partner Doosan already has long lead components in production, meaning NuScale is, in CEO John Hopkins' words, positioned to answer not whether to go with nuclear, but which technology can actually deliver and when, as AI-driven electricity demand intensifies utility interest in new nuclear capacity. The company's international pipeline, Romania's RoPower project, Poland's KGHM partnership, and early-stage discussions in Ghana provides diversification beyond the single, currently stalled TVA relationship. And its $1.9 billion cash position gives it multi-year runway to reach a commercial inflection point without near-term financing risk, however dilutive that capital raising has already been. The bear case is substantial and well documented. Revenue has effectively disappeared, down 98.8% year-over-year in Q2 2026. The company is not expected to be profitable in 2026 or, per consensus estimates, in 2027, and NuScale is currently defending a securities fraud class action alleging it misrepresented the experience and qualifications of ENTRA1 Energy, its exclusive commercialization partner for the flagship TVA deal. A partner independent analysts at Guggenheim Securities have characterized as effectively a three-employee entity supporting a single individual. The stock has fallen more than 80% over the trailing year, trades meaningfully below the average sell-side price target of $14.84, even as Citigroup has set a target as low as $7, and shareholders have already been diluted substantially, with Class A shares outstanding rising roughly 29% over the past year to fund the company's cash stockpile. Thesis in one sentence: NuScale holds a genuine, hard-to-replicate regulatory and manufacturing readiness advantage in the SMR race and has the cash to wait out a slow commercialization process, but its entire near-term investment case now hinges on a single unsigned megadeal with TVA, a discredited commercialization partner, and an active securities fraud lawsuit that together have already cut the stock by more than 80% from its highs. Section 3. Company Overview. Legal Entity. NuScale Power Corporation. Headquarters, Corvallis, Oregon. Exchange, ticker, NYSE/SMR. Founded, 2007. Chief Executive Officer, John L. Hopkins. Chief Financial Officer, Ramzi Hamadi. Core Technology. NuScale Power Module, the only SMR design with full U.S. NRC approval. Class A shares outstanding, 410.4 million as of June 30, 2026, up from 318.5 million a year earlier. Corporate milestones. Date: milestone 2007. NuScale Power founded in Corvallis, Oregon. Pre-2025. NuScale becomes the first and remains the only SMR developer to receive full U.S. NRC design approval, initially for its 50-megawatt module. July 2025. NRC approves an uprated 77-megawatt version of the NuScale Power Module, giving the company 2 approved designs. September 2, 2025. NTRA1 Energy and TVA jointly announce an agreement to explore developing up to 6 gigawatts of new nuclear power generation using NuScale technology. November 6, 2025. NuScale discloses Q3 2025 G&A expenses ballooned to $519 million from $17 million a year earlier, due to a $495 million milestone payment to NTRA1. Stock falls more than 12% over the following 2 trading days. Late 2025, early 2026, former largest strategic shareholder Fluor fully exits its roughly 40 million share stake via open market sales totaling approximately $2.43 billion. April 7, 2026, securities fraud class action. Trudson v. NuScale Power Corporation, formally announced, covering the May 13th to November 6th class period. August 5, 2026, reports Q2 2026 results. Revenue collapses to $0.1 million, while cash and investments swell to $1.9 billion following a substantial equity raise. Business model.
NuScale operates as a technology licensor and equipment engineering supplier, not as a build-own-operate power plant company, a deliberate strategic distinction from some competitors, such as Oklo, which intend to own and operate their own reactors. NuScale designs the NuScale Power Module, sells that design and the associated manufacturing and engineering support to commercialization partners and utilities, and earns revenue through engineering services contracts, such as front-end engineering and design or FEED work, licensing arrangements, and eventually equipment and long-term services revenue once plants reach construction and operation. This model depends critically on intermediary commercialization partners, most notably Entra One Energy, which is responsible for actually financing, developing, and implementing lumpy and tied to the specific pace at which these partners convert framework agreements into signed engineering contracts and eventually construction commitments, a dynamic starkly illustrated by Q2 2026's 98.8% revenue collapse once a single prior engineering contract, the Fluor FEED Phase 2 work for Romania, concluded with no immediate replacement. Have a think about it. NuScale's chip in the Dell computer analogy is useful, but investors should note one important asymmetry. Unlike a chip supplier selling into an already existing high-volume computer market, NuScale is selling into a market where the computers, nuclear power plants themselves, don't yet exist at commercial scale, meaning NuScale's near-term fortunes depend enormously on its partners' and customers' own project timelines, not just on NuScale's own execution.
Section 5. Products and Services. Product/service. Description. NuScale Power Module, NPM. The company's core small modular reactor design, available in a 50 MW original configuration and a 77 MW uprated configuration, NRC approved July 2025. Voyerg plant configurations. Standardized power plant designs combining multiple NPMs in a 4, 6, or 12 module configurations to deliver a range of total plant output. Regulatory and licensing support. Support services for navigating NRC licensing and construction/operating license requirements. Startup, testing, and commissioning support. Services supporting the transition from construction to operational power generation. Training, O&M, and fuel management services, operator training programs, ongoing operations and maintenance program management, fuel management including reload analysis, and outage planning and execution support. Industrial applications, Ibarra-Elliott Energy Partnership, strategic partnership for the development, demonstration, and testing of industrial-scale compressors powered by NuScale modules, extending the technology beyond traditional grid electricity generation. Manufacturing readiness remains a genuine, tangible asset. Management has stated that critical long-lead components for the NuScale Power Module are already in production with manufacturing partner Doosan, meaning the company could move relatively quickly into construction phase activity once binding commercial contracts, particularly the TVA/Entra agreement, are actually finalized. How to think about it? The gap between manufacturing ready and revenue generating is the single most important thing to track with NuScale. The company can legitimately claim technical and supply chain readiness today, but that readiness only converts into financial results once a customer actually signs a binding priced contract, something that, as of this report date, still has not happened for the company's largest prospective deal. Section 6. Industry Overview. Surging AI-related electricity demand has renewed broad investor and utility interest in nuclear power generally, and SMRs specifically, as SMRs promise lower upfront capital costs, factory-based manufacturing, and faster deployment timelines than traditional large-scale nuclear plants. This has fueled a wave of utility and hyperscaler interest in nuclear power purchase agreements, benefiting the broader SMR sector, even as individual companies, including NuScale, continue navigating the long, uncertain path from regulatory approval to actual commercial construction. Within this broader nuclear resurgence, NuScale's specific position as the sole NRC-approved SMR vendor is a genuine structural advantage, but the industry as a whole remains pre-commercial. Independent analysis has specifically noted that NuScale's own commercial deployment timeline projects first module delivery no earlier than 2031, illustrating just how long the runway from today's regulatory and manufacturing readiness to actual electricity generation still is across the sector. Section 7. Market Opportunity. NuScale's single largest near-term opportunity remains finalizing a definitive power purchase agreement between Entrawan and TVA for the previously announced up to 6 gigawatt deployment, potentially encompassing as many as 72 NuScale power modules, and, per prior company disclosure, milestone payments to Entrawan that could exceed $3 billion over the life of the agreement. Management described these discussions as active and progressing on the Q2 2026 earnings call and has previously expressed hope that a PPA could be finalized before the end of 2026, though no binding timeline has been confirmed as of this report's date. Beyond TVA, NuScale's international pipeline offers additional geographically diversified opportunity. Romania's RoPower project has moved into its next phase following shareholder approval, with the project expected to spend approximately 15 months on engineering and site-specific work before construction begins, assuming pre-EPC financing is secured. Poland's KGHM Polska-Miedź partnership targets a Voyeur 12 configuration, and early-stage discussions continue in Ghana and other international markets. This diversified pipeline means NuScale's commercial prospects are not entirely dependent on the single, currently stalled TVA relationship, even though TVA remains by far the largest individual opportunity in dollar terms. How to think about the opportunity. Investors should watch for a signed, definitive PPA with TVA as the single most important near-term event for NuScale, not because it would immediately generate large revenue — construction and delivery will still take years — but because it would be the first real proof that the company's largest prospective commercial relationship can actually convert from announcement to binding contract, something the Entrawan partnership has not yet demonstrated at scale. Section 8. Competitive Landscape. Competitor. Listing. Positioning. Oklo Inc. NYSE OKLO. Pursues a build, own, operate model, retaining ownership and operation of its own reactors rather than licensing technology to third parties. Independent analysis notes Oklo is, quote, still progressing multiple first-of-a-kind deployments, suggesting it remains further from commercial execution than NuScale on a pure technology readiness basis, though it has not faced the same partner-related credibility questions. X Energy, private as of report date. Developer of the XE100 high-temperature gas-cooled SMR design, a further alternative SMR technology competing for many of the same utility and industrial customers. GE Vernova, Hitachi, Nuclear Energy. NYSE, GEV. Developer of the BWRX-300 SMR design, backed by the substantial manufacturing and balance sheet resources of GE Vernova, and separately supported by WBX Technologies as a qualified component supplier. Westinghouse, private. Large incumbent nuclear technology provider, increasingly active in the SMR space, bringing decades of large reactor manufacturing and licensing experience. Nano Nuclear Energy, NASDAQ, NNE, smaller, earlier-stage SMR and micro-reactor developer. NuScale trades a valuation premium 2.77 times book value relative to both NE and Nano Nuclear, per independent analysis. Where NuScale stands. NuScale's core competitive advantage remains its unique, sole NRC design approval status and its manufacturing readiness position with long lead components already in production. However,
independent analysis has raised the question of whether NuScale's higher valuation multiple relative to peers like Oklo and Nuclear is fully justified, given that its own largest prospective commercial deal has, if anything, generated more investor skepticism via the Entry controversy and resulting litigation than confidence over the past year, even as the company's regulatory head start remains real and durable.
Section 9. Management Team. John L. Hopkins, Chief Executive Officer. On the Q2 2026 earnings call, Hopkins framed the current nuclear demand environment directly. As demand for clean, reliable power grows more urgent by the day, the question for off-takers is no longer whether to go with nuclear, it is which technology can actually deliver and when. Hopkins is named as a defendant in the pending Trudson Securities class action, which centers in part on statements he made during the Q2 2025 earnings call, August 7, 2025, highlighting the Entra1 partnership as key to deploying NuScale's technology ahead of the subsequent Q3 2025 disclosures that triggered the litigation. Ramzi Hamidi, Chief Financial Officer. On the Q2 2026 call, Hamidi explained the quarter's revenue collapse directly. The year-on-year decrease reflects the completion in late 2025 of the floor feed Phase 2 work in support of the Power project. That scope had no comparable activity in this period. Hamidi indicated the company will wait for greater contract visibility, particularly around TVA, before providing formal margin or revenue guidance, and separately expressed optimism earlier in 2026 that we're hopeful that TVA can come across the line at some point later this year. Hamidi is also named as a defendant in the pending Trudson Securities class action. Section 10. Financial Performance. Metric. Q1 2026, Q2 2026. Revenue, $0.57 million, missed $14.67 million estimate by 96.15%. $0.1 million, missed consensus by about 92.5%, down 98.8% year over year. Adjusted EPS, minus $0.14, missed minus $0.13 estimate, minus $0.13, in line with consensus. Cash and investments, approximately $1.0 billion, rising to greater than $1.2 billion by early May, approximately $1.9 billion, up nearly $900 million sequentially. In plain terms, NuScale's revenue has been essentially negligible for 2 consecutive quarters, reflecting the company's genuinely pre-commercial status. There simply isn't a large, steady base of engineering or licensing revenue right now, and results swing dramatically based on the timing of individual project milestones. What has changed substantially is the balance sheet. Cash and investments nearly doubled quarter over quarter, driven overwhelmingly by a large equity raise rather than by operating cash generation. Cash flow and dilution. For the first 6 months of 2026, operating activities used $372.86 million in cash, compared with $51.11 million a year earlier, a substantial increase in cash burn, driven in part by a $268.20 million reduction in accounts payable and accrued expenses. Financing activities provided $985.10 million during the same period, including $984.48 million from common stock issuance net of fees. As a direct result, Class A shares outstanding rose to 410.4 million as of June 30, 2026, from 318.5 million a year earlier, an increase of roughly 29%, representing meaningful dilution to existing shareholders, even as it funded the company's now substantial cash position. Section 11. Detailed analysis, latest quarterly earnings, Q2 2026. Revenue. Total revenue was approximately $0.1 million, reported variously as $75,000 to $100,000 across sources, down 98.8% from $8.05 to $8.1 million a year earlier, and missing the analyst consensus of roughly $8.8 to $8.9 million by a wide margin. The collapse reflects the late 2025 completion of Fluor's FEED Phase 2 engineering work supporting the RoPower project in Romania, which had no comparable replacement activity during the quarter. Gross margin. With quarterly revenue of only about $75,000 to $100,000, NuScale recorded a small gross loss for the quarter, even as cost of sales declined alongside revenue, a reflection of the company's fixed cost base relative to its currently negligible revenue, rather than a meaningful standalone gross margin metric at this scale. Operating income. Operating expenses increased across all three major categories: R&D, G&A, and other, widening the operating loss for the quarter. Research and development spending rose approximately $6.6 million year over year, primarily reflecting continued work to improve the technological readiness and design maturity of NuScale power module components. Net income. NuScale recorded a net loss for the quarter, though increased investment income, up approximately $8.5 million year over year, reflecting the company's much larger cash and investment balances, provided a partial offset to the widening operating loss. Precise standalone GAAP net loss dollar figures for Q2 2026 specifically, information not publicly available as a single reconciled figure in the specific sources reviewed for this report. Readers should consult the complete Form 10-Q on SEC EDGAR for the exact net loss figure. EPS. Adjusted EPS was negative $0.13, matching the consensus estimate, the first quarter in some time in which NuScale has met rather than missed the bottom line consensus, even as revenue missed dramatically. Cash flow. As detailed in Section 10, 6-month 2026 operating cash flow used $372.86 million, compared with $56.11 million used in the prior year period, while financing activities provided $985.10 million, primarily from a large common stock issuance. Balance sheet. NuScale ended the quarter with approximately $1.9 billion in cash, cash equivalents, and short and long-term investments, comprised of $766.46 million in cash and cash equivalents, $305.69 million in short-term investments, and $820.85 million in longer-term investments, up roughly $900 million from the end of Q1 2026. Guidance. NuScale did not provide traditional near-term revenue guidance on the Q2 2026 call. CFO Ramzi Hamadi indicated the company will wait for greater commercial contract visibility, particularly progress on the TVA Entra 1 power purchase agreement, before providing formal forward margin or revenue guidance. Analyst consensus currently projects approximately 33% full-year 2026 revenue growth versus 2025, with the company not expected to reach profitability in 2026, and consensus full-year EPS of approximately negative 50 cents. Management commentary. CEO John Hopkins stated, "As demand for clean, reliable power grows more urgent by the day, the question for off-takers is no longer whether to go with nuclear, it is which technology can actually deliver and when," emphasizing NuScale's sole NRC approval status and existing manufacturing readiness. Management described commercial discussions between NTRIAF and TVA as active and progressing toward what could become one of the largest nuclear deployments in U.S. history, while acknowledging no definitive PPA has yet been signed. Once PPAs are finalized, management indicated the company is prepared to move quickly into front-end engineering design, construction operating license work, and OEM contract negotiations. Key changes versus previous quarter. revenue fell further from an already low $0.57 million in Q1 2026 to approximately $0.1 million in Q2 2026, underscoring the company's continued pre-commercial revenue profile. Adjusted EPS met consensus for the first time in recent quarters, -13 cents versus -13 cents expected, a modest positive relative to the prior quarter's miss. Cash and investments nearly doubled sequentially from roughly $1 to $1.2 billion to approximately $1.9 billion, driven by a large equity raise rather than operating performance. Class A share count rose meaningfully, reflecting the dilutive impact of the capital raise that funded the cash buildup. Shares fell in both regular and after-hours trading following the report, reflecting continued investor focus on the revenue shortfall and unresolved TVA timeline over the improved cash position.
Section 12. Growth Drivers. 1. Finalization of the TVA Power Purchase Agreement. A signed definitive PPA for the up to 6 gigawatt in tri-TVA deployment would be the single largest potential catalyst, providing the first real conversion of NuScale's largest prospective relationship from announcement into binding commercial commitment. 2. RoPower Romania project advancement. Continued progress following shareholder approval and securing pre-EPC financing to begin the roughly 15-month engineering and site-specific work phase would mark tangible movement on NuScale's most advanced international project. 3. Sole NRC approval status and manufacturing readiness. NuScale's unique regulatory position and Doosan's ongoing production of long lead components mean the company could move relatively quickly into construction phase activity once contracts are signed, a genuine competitive advantage versus SMR peers still working through initial regulatory approval. 4. Broader AI-driven nuclear demand tailwind. Surging electricity demand from AI data centers continues driving utility and hyperscaler interest in new nuclear capacity broadly, a macro tailwind that benefits NuScale's addressable market even independent of company-specific execution. 5. Substantial cash position reduces near-term financing risk. The $1.9 billion cash and investment balance provides multi-year runway to reach a commercial inflection point without needing to return to capital markets under distressed conditions, even though the recent raise itself was dilutive. Section 13. Key risks. 4. Active securities fraud class action. The Trudson v. NuScale Power Corporation class action, U.S. District Court, District of Oregon, number 3226CV00328, alleges NuScale and named executives, including CEO Hopkins, made false or misleading statements about Entra One Energy's experience and capabilities as a nuclear plant developer, covering the May 13, November 6, 2025 class period. This litigation remains unresolved and could result in financial liability, reputational harm, or further disclosure scrutiny. 4. Entra One partner credibility concerns. Guggenheim securities analysts have characterized Entra One as a 3-year-old company that has never built, financed, or operated anything, with just 3 employees and 1 investor, a partner quality concern that goes directly to the heart of whether NuScale's largest prospective deal, the TVA deployment, can actually be executed as structured. An unsigned TVA power purchase agreement. Nearly a year after the Entra One TVA framework agreement was announced, September 25, 2025, no definitive binding power purchase agreement has been signed. Management's own commentary continues to describe discussions as merely active and progressing, with no guaranteed timeline for finalization. A near total absence of current revenue. Revenue has fallen to a negligible $0.1 million in Q2 2026, and the company has missed consensus revenue estimates in each of its last several reported quarters by extremely wide margins, reflecting deep uncertainty about the timing of any near-term commercial inflection. Substantial and continuing shareholder dilution.
Class A shares outstanding rose approximately 29% year-over-year to fund the company's cash buildup and continued cash burn, nearly $373 million used in operating activities in just the first half of 2026, suggests further capital raises and further dilution may be necessary before the company reaches self-sustaining commercial revenue. A loss of major strategic shareholder. Former largest shareholder Fluor fully exited its approximately 40 million share stake via open market sales totaling roughly $2.43 billion, removing a significant pillar of institutional and strategic backing from NuScale's capital structure. A long commercial deployment timeline. Independent analysis notes NuScale's own projections point to first module delivery no earlier than 2031, meaning even a successfully signed TVA agreement would not translate into meaningful revenue for several more years, testing investor patience over a very long horizon. Deteriorating analyst sentiment. The stock carries a Zacks rank of 4, sell, ahead of recent earnings, trades below the average sell-side price target of $14.84, and has seen a price target as low as $7 from Citigroup, alongside full-year revenue estimates that have been cut by more than 60% over just the past 90 days. Section 14. Valuation. Metric. Value. Recent share price, approximately $8.84 to $9.37, regular and after-hours trading following Q2 2026 report. Trailing one-year return, approximately minus 81%. Year-to-date return through early August 2026, approximately minus 33% versus S&P 500 plus 13%. Price-to-book multiple, approximately 2.77x, a premium to peers Oklo and NanoNuclear. Average sell-side price target, 16 analysts, $14.84, with a high of $25 and a low of $6. Citigroup price target, $7, below the recent trading price. FY 2026 consensus revenue estimate, cut over trailing 90 days, approximately $39.7 million, from approximately $99.9 million. NuScale's valuation reflects a market still assigning meaningful option value to the company's regulatory lead and manufacturing readiness, even as near-term fundamentals have deteriorated sharply. Trading at roughly 2.77 times book value, a premium to both Oklo and NanoNuclear, despite NuScale's own commercial setbacks, suggests investors continue to give some credit to the company's sole NRC approval status and its substantial $1.9 billion cash position. At the same time, the wide dispersion in sell-side price targets, from Citigroup's bearish $7 to a high estimate of $25, illustrates just how unresolved the debate remains about what NuScale is actually worth, absent a signed TVA agreement, with the stock's post-earnings trading level sitting closer to the bearish end of that range.
Section 15. Upcoming catalysts. Catalyst. Expected timing. Why it matters. Definitive TVA/Entra 1 power purchase agreement. Management has expressed hope for later this year, 2026, not guaranteed. Would represent the single most important commercial validation event for NuScale's largest prospective deal. Q3 2026 earnings report. Information not publicly available, typically early November. Will show whether revenue remains negligible or begins reflecting any new signed contracts and updates the cash burn trajectory. RoPower Romania pre-EPC financing and construction start. 15 months of engineering and site work once financing secured. A tangible, trackable milestone on NuScale's most advanced international project outside the U.S. Trudson Securities class action developments. Ongoing, following the April 20, 2026 lead plaintiff deadline.
Further legal developments could affect both financial liability exposure and continued reputational overhang. Additional international partnership progress, Poland, Ghana, ongoing, would demonstrate commercial diversification beyond the currently stalled TVA relationship. Section 16. Long-term outlook. NuScale's long-term outlook depends on whether the company's genuine regulatory and manufacturing readiness advantages can ultimately be converted into signed, bankable commercial contracts at scale, something that more than a year after the TVA framework agreement was first announced remains unproven. If a definitive TVA PPA is eventually signed, and if the RoPower and other international projects continue advancing toward construction, NuScale's sole NRC approval position could translate into a genuinely differentiated, multi-decade nuclear technology licensing business. The company's substantial cash position provides the runway to wait for that outcome without near-term existential financing. However, independent analyses projection of first module delivery no earlier than 2031 means that even a successful outcome on the TVA deal would still require years of patient capital before meaningful revenue materializes, and the NTRI partnership's credibility issues raise a deeper question about whether NuScale's current commercialization structure, relying on a small, thinly resourced intermediary partner rather than direct utility relationships, is the right long-term model, or whether it will need to evolve. Until a definitive TVA agreement is signed and additional commercial contracts materialize, NuScale's long-term trajectory will likely remain difficult to forecast with confidence, and the stock is likely to remain a speculative headline-driven security rather than one that can be valued on current or near-term fundamentals. Section 17. Bull Case. Bull Case Summary. Entra 1 and TVA finalize a definitive power purchase agreement before the end of 2026, as management has expressed hope for, converting NuScale's largest prospective relationship into a binding commercial contract and triggering rapid movement into front-end engineering design and construction operating license work. RoPower Romania secures pre-EPC financing and advances into its construction preparation phase. Additional international agreements, Poland, Ghana, progress towards signed contracts. The securities class action is resolved favorably or immaterially, and broader AI-driven nuclear demand continues intensifying utility interest in NuScale's sole NRC-approved technology. In this scenario, NuScale's $1.9 billion cash position and manufacturing readiness would position it to move quickly from a pre-commercial story into an early commercialization one, potentially supporting substantial share price recovery from current depressed levels. Section 18. Bear Case. Bear Case Summary. The TVA/UNTRA1 power purchase agreement continues to slip without finalization, extending the active and progressing but unsigned status that has now persisted for nearly a year. The securities class action results in significant financial liability or further damages NuScale's reputation with prospective commercial partners. Continued cash burn, nearly $373 million in H1 2026 operating cash use alone, necessitates additional dilutive equity raises beyond the recent $985 million issuance. UNTRA1's limited experience and resources prove a genuine structural impediment to closing not just the TVA deal, but future commercialization deals generally. And competitors like Oklo, X-Energy, or GE Vernova Hitachi's BWRX 300 gain commercial traction faster, despite NuScale's regulatory head start. In this scenario, NuScale shares could continue declining toward or below Citigroup's bearish $7 price target, as the market increasingly discounts the company's regulatory advantages absent any tangible commercial conversion. Section 19. Final investment conclusion. NuScale Power holds a genuinely rare and durable technical advantage, the only NRC-approved SMR design in the United States, with long lead manufacturing components already in production, at a moment when AI-driven electricity demand has renewed broad interest in nuclear power generally. That combination is real, and it is the foundation of any credible long-term bull case for the stock. Equally real, however, is the fact that this advantage has not yet converted into meaningful commercial revenue. Q2 2026 revenue collapsed to essentially zero. The company's largest prospective deal remains unsigned nearly a year after being announced, and NuScale is currently defending a securities fraud lawsuit tied directly to the credibility of the partner responsible for closing that deal. Investors considering NuScale today are, in effect, making a binary bet on whether the ENTRA1/TVA relationship and the broader commercialization model it represents can actually deliver a signed, bankable contract, rather than a bet on current or near-term financial performance, which remains negligible by design at this stage of the company's development. The $1.9 billion cash position meaningfully reduces near-term existential financing risk, but it does not resolve the fundamental commercial execution question that has driven the stock down more than 80% over the trailing year. Bottom line, NuScale Power offers investors leveraged, high-risk exposure to a genuine technological and regulatory lead in the small modular reactor race, but the investment case today depends almost entirely on an unresolved, litigation-clouded commercial relationship finally converting into a signed contract, an outcome that remains possible, but as of this report's date, unconfirmed. This report does not constitute a recommendation to buy, sell, or hold SMR shares. Readers should review the company's complete SEC filings and consult a qualified financial advisor before making any investment decision.